good afternoon, everyone. I'm just letting people in as we speak. I'm going to have everybody muted and videos off for everybody as we go here. Presentation won't be too long. We'll give however questions at the end. You can ask questions via the chat box. That's the easiest way to ask to do that as everyone's mics will be off. So again, as everyone's coming in, we'll have everybody's mics and videos off. Get started here right away, just so we're letting all the different participants in. We do have privacy settings on, so there is you won't be able to see. I don't know how it all works, but I've noticed you're not able to see lots of things that we can see on our end. But like I said, you can ask a question via the chat box if you have them as we go. And then hopefully, and then we'll go from there. So we'll get started here as we're just letting everybody in. Get started here in 1 minute, just to be respectful of your time, and we'll go from there. Thanks so much. Okay, we're gonna get started here. There'll be a few stragglers as we go along. That's always the case. A few things to also be aware of is that we do record it. All videos will be on our YouTube channel. We actually put up a YouTube channel. Most days we put up a video on different tips. So, for instance, yesterday we talked about seasonal income, and we talked about the fact you have 9 credit scores. So lots of information that that we find clients are unaware of. We always do actually YouTube videos based on an actual situations having a day where a client has come with a question that we're surprised they don't know, or often something that's coming up a little more regular. So today we're talking about the ultimate pre-approval. I wanted to highlight, very specifically, as we know, government legislation has come and saying that, essentially we're going to have a situation where there'll be a cooling off period and people will, not be able to write firm offers where they have no conditions. Now we see a myriad of different reactions to this, but I think this particular tool can be very helpful. I mean, we obviously realize that lots of people write offers firm with no conditions, but there is some nerves we have with that on, that's it does require people to be a bit more organized, but where those clients are first-time home buyers or buyers that have a few more quirks through file, how do we make them a strong offer against people that potentially could come in cash or very, very strong, approved borrowers? So this is a program we call the Mortgage Approval Assurance Plan, and we call it the ultimate pre-approval today. So what are the problems we see with pre-approvals that we're getting? So like we're talking about when a pre-approval letter is done, you're getting it from us, or you're getting it from a bank. That's the pre-approval letter you're walking into an offer with. The problem with these pre-approvals are it certainly doesn't obligate anything to anybody. It's not necessarily worth anything more. I would say the true value is that someone's written a pre-approval and at least, they talked to a financing person prior to offering on the property, which is, that's super great and important. But it doesn't mean that they've been approved, or you don't have any, you're not able to assess any, real true feeling to whether how strong the approval is or anything like that. And certainly if it doesn't come through, there isn't any obligation on anybody's side. Now, we see pre-approval letters where people have gotten pre-approved all the time, yes, from competitors, but we don't. But if I'm honest, a lot of the time the pre-approval letters we see from people are auto-generated. And so people are coming into an auto-generated pre-approval, and they haven't ever talked to anybody. So the client may have not supplied all information. They haven't actually looked at, income documents or about their debts. I mean, I was doing a mortgage for a family member recently, and I discovered they forgot to include a property that they had been added on recently. That I, even knowing them very intimately, I didn't realize they had owned a property that they had been added on to with their with a parent that was dying. So all these things are things that like cause things to fall apart at the 11th hour. Oh, I actually am getting child support or whatever it is. So oftentimes clients have not supplied the information, certainly a pertinent information that can make a deal go sideways. A lot of times pre-approvals, people haven't even had their credit pulled. And this is a problem, right? Because people will say to us, I don't want you to pull my credit beforehand. And what happens is that there's often things on people's credit that that we'll need to address. They may have co-signed a loan and forgot about it. Co-signing a car loan for a kid, they often do not include that in an application and don't think that affects them, and it can affect them on a quite in a quite meaningful way. The other thing we see a lot of is people having some type of identity theft. I would say 1 in 5 clients have a mistake on their credit bureau. We recently had a client that, retired, very good savings, all the type of thing. And what did they, we are to find that, they had their identity stolen from a U.S. company and had them in collections. And those were things that needed to be addressed before we can move forward on funding the deal. So the other thing is that when they've done a pre-approval, there's not been any conversation around the property. We see more and more people purchasing properties that are, maybe they're mobile homes or maybe they're hoarder houses or anything like that. So these pre-approvals, they only carry a strength if you know the person behind it. There's privacy involved, all the types of things. And so, they definitely carry some risk on that. So how are we doing it differently? So first of all, when we do a pre-approval, we're going to look at all the documents, right down to the void check. We make clients, before we finish pre-approval, we have to do their void check, their pre-approval, all those types of things. We're always going to pull credit. People do not realize they have 9 credit bureaus. 9 credit bureaus. And sometimes credit card companies or car loan companies don't report on all credit bureaus. What happens is that all of a sudden we submit the deal and we find out after the fact that they have a debt they didn't disclose. We had somebody actually 2 days before closing, not on their credit bureau, did not put in their application, but them finding that there was a debt on another credit bureau that was a car loan that was not disclosed anywhere, not on a credit bureau. So these are things that come up a lot more than people realize, and they can meaningfully affect the pre-approval. We want to discuss the property issues. What kind of property buys could be a problem? If I buy a mobile in a park, if I buy a mobile on land, if I buy something on native land, how are these going to affect what I'm pre-approving? So we're running to a very encompassing pre-approval. I mean, the comment we often get is you're asking for way more than my other broker or bank asked for, and you're asking for way more documents. And this is very intentional on our part because we want to make sure that we're not missing on something that's going to cause the deal to go sideways down the road or cause us to quote them an inappropriate amount. Nothing worse than say, hey, you can only qualify for 400, to find that number could be much bigger and put them into a different realm of ability on properties they could be buying. So how are we doing that differently? And now why do not all banks and brokers do it? Well, the truth is that clients are very reluctant to go through the whole process. They don't want to supply the document. They don't want to do the credit up front. They don't feel like it's very real. And so clients are often asking for some type of pre-approval that really very much is not the whole 9 yards. And they want us to, the question we often get is, assume my credit's perfect. Assume my income is 100 grand a year. What could I qualify for? And clients often want some type of pre-approval that is very vague. So they can go on the property. They don't want to go through the work before it. And so we found for years, the problem was not that we didn't want these documents. The problem is not that brokers or banks didn't want these things, but clients were simply unwilling until they had a live property, and then game on. Then they want to follow stuff, and that's where things fall apart. It wasn't that we had done something where we had used the information disclosed to us, but clients had not been willing to do it. So how can we make the ultimate pre-approval happen? So first of all, it's by doing this type of incentive. So we are getting pre-approvals to this point because we are offering something different for the client and the seller. That means they're willing to do the work up front in order to make that pre-approval stronger. It makes us look better, it makes a realtor look better by doing these things. First of all, we are going to give them a pre-approval that says the pre-approval says what we verified. We verified your income, we verified your credit, we verified your down payment, all those types of things. It's going to say what lenders we think they can fit with. So we know there's actual lenders we have in mind. Letters can be addressed from us, the financing company, to the seller. Mr. and Mrs. Smith, this client has been pre-approved for this property at 123 Jones Street. And, we just want to let you know, we verified this, all types of things. And it's going to specifically say that if you accept our offer, Other than a property appraisal or a client falling apart because of home inspection, but if the offer falls apart because we can't remove subjects because we can't get them approved, we'll pay you, the seller, $5,000. So that's coming from us to the seller. We'll pay them $5,000. So when we tell a buyer, hey, we are equipping you with this letter that we're sticking behind $5,000 behind it, that means they are more inclined to do all the work. That means we don't have things blow up at the last second. And so that's very, very important. And so that's what we're offering, that they would come in and they would take the letter. The letter comes with a promise that if we don't remove subjects, we're going to give the seller $5,000. Now, what does this letter look like? I'm going to show you just really briefly here what the letter looks like, and then I'm opening up for questions on what we're doing with it. Hold on a brief second while we switch screens here. This is actually our pre-approval tab that I'm going to be showing you, that a client would get. So the other thing that is important to mention is that when we do a pre-approval, we are giving them what's called the dynamic pre-approval. And so that dynamic pre-approval means that, like, and I'll show you this as well, is that the clients are able to actually go ahead and as properties are different, they're able to go ahead and change information, which I'll show you here right now. Okay, so I have that available. All right, so this would be our pre-approval. So by the way, we often brand these with realtors. So that's as well. So if a client has a pre-approval with us, this is what's called the qualification center. So if a client says, oh, Joel, I know you're going qualifying for $900,000, but I've reached this property I'm buying only has $3,000 in property taxes, $3,500. They're able to change all those things. And then what's going to happen is that on these pre-approvals, actually, they can select, and it's going to tell them whether they so it's going to say, they don't quite qualify for that. It's going to tell them whether they qualify. So they can actually change information based on the property. So that is something that we do. Then this is what's attached to our pre-approval letter. This is the mortgage approval insurance plan that we we're just talking about. So on the back of the letter, there is an option for them to view their mortgage approval insurance plan, what we just talked about. This is the letter that would go towards a seller. So we have put in the seller address, the seller's name. It has a lot of information, why we even need a finance condition, the situation appraisal, verification of the down payment, property, all the types of things. 5 lenders we have on there, those are not real rates, and then we have certified that. So this would be the pre-approval letter that we actually give to clients, and they can print right off of our portal at all times, and it would look like this, and they would attach it to their offer. So anyway, that's what that looks like. So that is our program. That is our ultimate pre-approval that we're doing for clients. We think it's a really great tool. It's super helpful. Now I'm just going to open up the floor just for questions and see if there's anything that that you're wondering from what I've covered on that that could be helpful. Yeah, so it is us that is the $5,000. It's not the lender. We pay the $5,000. We pay the $5,000. Any other questions? Oh yeah, great point. So we actually, like, this is a problem, is that a lot of people have privacy problems when it comes to this. So we actually, when a client signs a credit consent, the privacy consent says I can share your information with any lender I choose, or any party I choose. So if I want to share stuff about the transaction with the realtor, I mean, it doesn't mean that we're gonna, be very cavalier on that, but we can certainly do that to put you in the best situation. All right. Well, if there's no more questions, thank you so much for your time today. If we can help you with any clients whatsoever, do let us know. We'd love to get a chance to help some clients be a lot stronger when it comes to pre-approval. So thanks so much today, and I hope you have a great day, and we'll talk to you soon.